Honestly, I would say to people, this is a company that they should be looking at and a country they should be looking at. You guys are on it. You know what you're doing. But what I want to know is, how do you move? How do you grow? You are going to need a new asset. So what are you doing? Welcome to our viewers on Crux Investor. Today we spoke with Steve Curtis. He's the CEO of Caledonia Mining. They've got a gold asset in Zimbabwe. I was particularly intrigued to understand what it's like to do business there. It's obviously got a checkered history. So we talk about the Mugabe years, post-Mugabe, what's changed. We also look at their strategy, dividends, and their plans for future growth, and get into a little bit of detail there. It was a bit exciting. So take a look at the description below, click on the relevant timestamp if any of those topics interest you. And if I can ask that you click the button in the corner of the screen to subscribe to our YouTube channel. And if you want to see more videos like this, click the notification bell. So let's hear what Steve had to say. Steve, how are you, sir?
I'm very well, thank you. And yourself?
Very good, very good. Very pleased to be speaking to you. Been wanting to hear your story for a while. You obviously run a tight ship there. I'm interested in Africa, having worked there a lot for 10 years. I want to sort of get an update on what's going on in Zimbabwe especially. But let's start off with a 1-minute summary on the business for people who have not heard the story before.
Okay, thank you. Caledonia Mining is a listed mining company with a single asset, producing gold mine in Zimbabwe. Not large at the moment, producing between 50 and 55,000 ounces a year. But the exciting thing is the expansion trajectory. We are sinking a new shaft at Blanket, which will enable us to build production up to 80,000 ounces. We're an underground hard rock mine. The new shaft going down to 1,200 meters, and effectively we're building a new mine underneath the old mine. The old mine's 110 years old. It's a relatively low-cost producer in a what people will believe is a difficult jurisdiction, but we'll talk about that, I'm sure, in more detail.
Yeah.
And importantly, Caledonia is a dividend payer, and we've been a dividend payer since 2013. We pay a dividend every quarter, and we're running on a yield of about 4% at the moment. And probably like a lot of junior mining companies, and especially golds, we think we are not attracting the right valuation. That's probably because we're small. Number two, Zimbabwe is difficult, but we should get credit at some point in time for expanding and for continuing with the dividend, if not lifting the dividend.
Right, well, let's get into some of this. That's a great summary, first of all. Let's get into some of that. Let's deal with the elephant in the room. Pre-Mugabe, post-Mugabe mining in Zimbabwe. I think there's some residual, as you say, I think it's maybe not necessarily fair anymore, but there's some residual perception as to what it's like working in Zimbabwe. Can you tell us a little bit about maybe life pre-Mugabe, not pre-Mugabe, I mean as in while Mugabe was in control? I mean, what were the sorts of difficulties you had to overcome?
Sure. Well, we've owned the mine since 2006, so we experienced hyperinflation. We bought the mine from Kinross, who just felt it was too small for them and too far away from the mothership. So a mine with a good pedigree. Prior to that, it was owned by Falconbridge. So you can see it's had some good owners. So it has got good infrastructure, well developed, but it's been under-resourced.
Yeah.
2006 got tougher and tougher and tougher. Monetary regime has always been hugely challenging in Zimbabwe, and I won't pretend that Zimbabwe is an easy place to do business. But just the evidence that since we've owned the mine, we've continued to invest. From everything that has been done at Blanket Mine is self-funded investment, which demonstrates to you that you can make money in what people will perceive to be a difficult environment. But obviously the disciplines required for managing a self-funded operation in that sort of environment with a huge shortage of foreign currency is difficult, but it's doable. And the fact Caledonia is a dividend payer, that money comes from the Blanket mine in Zimbabwe. 2008, hyperinflation was way out of control, and we actually had to shut the operation down for 6 months. And then dollarization came in. We had access to a gold export license. We went straight back into gold production, and Blanket, since April 2009, continued then in a dollarized environment to be highly cash generative and profitable. And we carried on with a project that was on the cards at that point in time. 2014, we had to make a very serious decision about a large expansion project, because a mine that at that stage was 104 years old was mining itself out of resources, and we were only mining down to a level of 750 meters, and we needed to expand. We needed to go deeper, and there were various alternatives in terms of going deeper. And the option we chose was a single, what we call the central shaft, going down to, now it's at 1,200 meters, which is its final depth. 3 new production levels, but building a new age mine below a very old mine. And I say a new age because the concept of this new project was formulated by our COO, Donna Roots, who comes out of the Goldfields family. He is used to sinking shafts. He's used to large mine operations. He's used to trackless mining. And that's what he is developing at the Blanket mine now. So it is a new generation mine, which is unique in Zimbabwe. A new shaft is unique in Zimbabwe. And again, very proudly, we announced the completion of the shaft in terms of sinking a couple of months ago, and 100% self-funded, $45 million spent so far. And we're equipping now, and this time next year, the equipping will be finished. We'll commission the shaft.
Okay.
2017 came along, and President Mugabe stood aside, and President Mnangagwa came into power. And I think the significant thing for us is there was going to be no night and day change to the environment. There had been significant damage done to the economy. But what it needed was a demonstration of commitment that we understand what trouble we're in. We understand what needs to be done. We understand we can't do this by ourselves. Therefore, there are going to have to be changes. And I think President Mnangagwa may not be getting enough credit for the significant changes that he has made. Zimbabwe runs a budget surplus at the moment, and there are not many African countries that can say that. It is cutting money supply. Inflation is still a problem, but they delinked their currency to the US dollar. So significant policy changes have taken place. It has brought with it difficulties for the population, definitely difficulties for the population. Has it really affected us as a gold mining company? Foreign currency continues to be difficult, but we continue to invest, we continue to distribute dividends, and you just have to work quite a lot harder. So I believe the significant thing is that there is hope. And you can see it in the people, you can see it in the policies being demonstrated, and the mere fact that the International Monetary Fund started a staff monitoring program to lay down conditions that Zimbabwe would have to meet to be able to then participate in the international financial markets, which is going to need to do if it needs to rebuild its economy. So that's, for me, the before and after situation. We're moving forward, policies are changing, and the current government is talking to the Western nations who hopefully will come to the party and help out.
Right, and you talk in the presentation about some of the changes to the royalty program there. The Ministry of Finance has announced some changes in royalties and tax treatments, etc. I mean, was that done willingly or under pressure from the mining community? I mean, how did that come about?
Well, obviously the changes to the royalty regime, the royalty a few years ago was 5% of gross turnover, and I'm talking from a gold perspective, not the other minerals. 5% of your gross revenues, and it was tax deductible. For their own reasons, they left it at 5%, but they made it non-deductible. Now that made it uncompetitive in the region. So obviously the Chamber of Mines and mining companies lobbied. There's no point in us being uncompetitive in the region. A dollar will invest itself where the returns are the most appropriate, risk-rated returns. And Zimbabwe needs dollars, so why make yourself uncompetitive? So lots of lobbying, census prevailed. With the rising gold price, they've said a royalty of 3% if the gold price is up to 1,200, 1,250, and 5% if it's above that, but it will now be tax deductible. So it's a move in the right direction.
Yeah, no, it definitely is. But I guess coming back to investor mentality, when like I said, worked and done business in Africa for many, many years, when you see things like previously, was it 2-3 years ago, Tanzania changing the goalposts or moving the goalposts, as it were, it just made investors nervous. And when a lot of African countries start to take control of mining law, mining regulation, etc., it's not necessarily always for the better, but I see positive moves here in Zimbabwe.
Yeah.
They understand the need for this, and when we meet a lot of the mining delegations that come to London, a couple of times each year, they say the right things. They don't necessarily always then go and do the right thing. So you're saying it's positive. Is there more to come?
Well, I think one significant thing that I probably missed out in the before and after scenario, under President Mugabe's government, they instituted what was called indigenization, which was a legal requirement for a 51% ownership by indigenous Zimbabweans. We did that. We complied, and Blanket Mine was, we restructured and we disposed of 51% of Blanket, leaving ourselves as a 49% shareholder. And that, of course, met with huge resistance from the investing community. It didn't really affect us because it was a facilitation loan structure, very similar to the South African BEE structures, which get repaid by the distribution of dividends. Blanket, being a highly cash generative company, was declaring dividends. Therefore, being a 100% shareholder or a compliant 49% shareholder, but having loans repaid to us, still gave us good access to the majority of the cash flows. So we complied. President Mnangagwa came in and recognized that 51% ownership was never going to attract a dollar of investment. And very early on, he repealed that legislation. And that's an enormously brave act inside of a continent where resource ownership of a non-generative resource, a depleting resource, very, very brave to say, gentlemen, you can own 100% of your business. Please come and invest. So, we are in the process of unwinding that structure. And we've announced that we've signed an agreement to buy back the first 15%, and we're hoping to conclude that quite soon. And importantly for us, we'll always keep our community partners in as a 10% shareholder, and we'll always keep our staff in as a 10% shareholder.
Yeah, but I always find that an interesting process. Like I said, having worked around Africa for many years, these paper exercises, which is what it is. You find a workaround to an investor problem. 51% is, usually they want to be carried as well. So it's like, it's the country's mineral rights, and they are entitled to earn from that. But the investors too, put the money in, are also entitled to earn from that. Or there's much more attractive options for them elsewhere in the world. And that's why I'm kind of fascinated by the way that Zimbabwe now is approaching this. There's much more sort of common sense of both, it's win-win, as opposed to more punitive decisions, which may be around economics, but more likely around politics, So it's interesting to sort of see how this has moved forward. And so it's getting a good response. You think you're seeing more investment into Zimbabwe?
There certainly has been a lot of interests since President Mugabe came into power.
Not just mining, presumably.
Not just mining, not just mining. Obviously, the very unfortunate incidences after elections where there were deaths, you can try and make yourself as attractive as possible, but those things are going to count against you. So there've been some footfalls, and those are going to have to be managed with the passing of time. But if you were able to take away the negative perception of the past of Zimbabwe, and unfortunately the land redistribution program, which was hugely negative for Zimbabwe and hugely damaging for the economy of Zimbabwe.
Yeah, for sure.
The small economy, it only earns its foreign exchange from limited areas, which were agriculture, mining, tourism, and a little bit of sort of manufacturing. And you destroy one of those key components, people are always going to be cautious. But there is a definite interest on behalf of the government to try and manage a situation. They're not just rolling over and saying, "Oh, everything we did in the past is wrong." They're trying to find a workable solution for the people of Zimbabwe, plus the economy of Zimbabwe, and for investors. From a mining perspective, because of the lack of investment and the lack of interest in Zimbabwe, the gold has not gone away in the ground. It was looked at 30 years ago by the Anglo-Americans of this world and some serious players. It was an unpalatable place. The gold is still there.
And I do want to talk about that, and we will come on to it. But I want to stick with just the politics now, because for investors, whether you be institutional, which is my background, or retail, high net worth family offices, which is the vast majority of the people who watch this show, is to understand the change in the political climate. So what is the government doing, not just mining, but across the board, if you don't mind, what is the government doing to help people in country understand the potential of what they've got? Like I say, some of the, as you say, missteps after the elections are, regrettable, I'm sure, but the economic benefit to a country which can open up and understand that foreign investment is part of the future success of the country. So what's happening at the moment?
The mantra of open for business is out there.
Right.
And
is it words or action?
I think actions definitely. The tax regime inside of Zimbabwe is perfectly palatable.
Okay.
Your ability to get a structure called a special economic zone status for a project allows you to have all sorts of long-term investment attractive benefits. The ability for the economy to grow has got to be multifaceted. So it needs a manufacturing sector to be rekindled, because that will provide employment. There's 92% unemployment in Zimbabwe, but they have probably singly got one of the best educated populations in Africa. And it's a tragedy that you've got these highly educated people who just can't get jobs. So the informal sector is very large, but you've got teachers and engineers who are selling tomatoes and airtime instead of doing what their jobs are. Now, all of that is recognized. And the processes to create opportunities for people to reinvest in business entities. The economy is small. It is very small. So when coming from where you come from, and the access to the type of monies that you've got access to, Zimbabwe needs a small slice. So It used to be one of the biggest agricultural producers in Africa. It used to export.
Yeah.
The ground is still fertile, so it can go back there. The minerals have not gone rotten, so that you can still go back there. The turnaround, I'm most worried about the manufacturing sector. Technology has moved on dramatically. And you won't just be re-engineering factories. You will have to retool, rebuild, and reconfigure. And will they ever be competitive? I don't know. So you can't build a vibrant economy by the government creating jobs and just employing more and more civil servants. Zimbabwe has that problem. Too much of its national revenue budget is consumed by paying salaries. It's identified by the IMF. It's agreed by the Zimbabwe that they've got to contract that number. That's not politically very palatable, but it's something that has to be done ultimately. So you can negotiate a good investment deal. You can talk to the right people. The ministers are there. They are willing. It's a peaceful country.
Oh, very
so
much
from a
so.
tourism
Fabulous
perspective,
people. Fabulous.
you've got some of the greatest spectacles of the world,
Yeah.
and it's a very peaceful country. Again, because of the lack of economic activity, the infrastructure generally is pretty good in terms of roads, airports, and things like that.
Yep.
Power is a major problem. You will have heard about that.
I've heard about
and
it
that's an issue for rebuilding an economy, lack of power.
Yeah, so I've heard about it in the context that you talk about it in your PowerPoint with regards to some of the issues around consistency and reliability for you guys. So look, firstly, thank you very much for that summary. It's always good to hear from someone on the ground, what's going on in the country. And if I've heard the message, it's open for business, but I've heard that across Africa, West Africa, the East Coast as well, and it invariably isn't. And I know Zimbabwe, great people, great country, and as you say, a lot of resource there, which maybe some people watching this will look at it and say maybe there's some opportunities to go and have conversations about. But let's come back to the mining, because that's what we're here to talk about. Let's talk about you. I'm looking at the numbers. You've been consistent. You're producing. You've taken advantage of the bump in the gold price recently, and you're continuing this growth trajectory. We see your plans to get up to 80,000 ounces, low AISC. It's all good. You're doing all the right things, and I guess at some point you're working towards maybe even getting to that 100,000 ounces to become a meaningful producer. Yeah. But there's a few, like Africa. Well, I would say mining is difficult. Mining in Africa is just a little bit more difficult. There's always little fires to put out every now and again. So why don't you tell us about the process that you guys are going through to between now and the end of I think it's 2022 you're aiming for, aren't you? Is that
yes.
So tell us a bit about that, if you don't mind, in summary.
Okay, so I've already spoken a bit about the fact that we were sinking a new shaft. It's not finished till it's finished. And we 1.2 kilometers deep, but we need to do the equipping. Again, this is all self-funded, and it does need a quantum of foreign currency. But again, in terms of the liberalization of the economy, and especially from a mining perspective, we now have access to 55% of our revenue streams in pure foreign currency, in our own foreign currency bank account, so we can make foreign payments. We then have 45% of our revenue streams paid to us in the equivalent, the dollar amount in the equivalence of the local currency at the appropriate exchange rate. And we have to pay certain of our bills in local currency. So that's wages, that's taxes, that's all your statutory obligations, royalties, things like that. So the 55-45, we have found when we're in front of investors, is number one, hard to understand, and it scares a lot of people. They're saying, You're being paid 45% in Zimbabwe dollars, you're not being paid for your gold. We are, and you can do the numbers. working back and saying, are we getting full value? And the answer is, as the exchange rate fluctuates, and it is fluctuating violently at the moment, every time the currency weakens, we get more local Zimbabwe dollars for our 45%. So it is working. And we pay for our electricity in hard currency. We pay for all our imports. We pay for our dividend distributions. And as I say, you don't sink a shaft spending $45 million, and we'll probably spend another 10 if you don't have access to hard currency. So we do have that. So we will finish the shaft. And we will have a shaft that will have capacity of about 3,500 tons a day. We've got a CIL plant that has got capacity of 3,500 tons a day. We've got a crushing section that has got a capacity of about 1,800 tons a day. So that'll need a little bit of investment, but that's not expensive. And we've got a milling section that's got a capacity of about 1,800 tons a day. We'll need one more mill. Because for us to produce 80,000 ounces, we need to process about 2,000 tons a day. So we're going to have spare capacity on the CIL plant. We're going to have spare capacity on the shaft, and we add a crusher and we add a mill. We kitted for 80,000 ounces. And we have a new mine, which is being mechanized at the moment. We have dump trucks underground now. We have LHDs. And so we've got different mining methods. We've got a life of mine of about 13 or 14 years. We've got about 1.7 million ounces in reserves and resources. And, that's a very good place to be for a mine that is going to have a low all-in sustaining cost. And it creates an opportunity for us to generate significant cash flows. So then the question is, so what are you going to do with the significant cash flows?
Yeah, exactly. Exactly. You're doing the interview for me. It's great.
We don't want to stay a single asset company, because that is risky.
Yeah, this is my point. It's like I read what you say. I've watched your interviews. You guys are on it. You know what you're doing. It's just getting from where you are today. You're getting all the infrastructure in place. You're self-funding. It's all great. You're generating cash flow. You're talking about being able to move to a free cash flow position of some significance after 2022, and it's building up the amount of ounces that you're producing and selling into the market. That's the journey. That's the bit of the journey that I'm interested in, because it doesn't get easier, and I appreciate you guys know what you're doing. Honestly, I would say to people, this is a company that they should be looking at and a country they should be looking at. So I'm sold. But what I want to know is, how do you move? How do you grow to that 80, 100,000 ounce? You are going to need a new asset.
Yeah.
So what are you doing?
Absolutely. Blanket is not going to be a 2,000 ounce gold producer. It could well be a very solid 100,000 ounce gold producer. So yes, we do need a new asset, and that gets back to what I've said. 30 years of the resource industry being ignored and not explored. There are many brownfield operations in Zimbabwe.
Good.
We have been doing our own due diligences on many of those, and our philosophy will be to find a number, singular, whatever, of good brownfield opportunities which we can grow from being ignored and underdeveloped up the value chain. We're not looking to go and buy a big, hairy, high-cost, struggling producer.
Dilutory.
That we can't add enough value to that. We want to be able to bring something up the value chain, because we've got a good, strong mining team who know how to develop, explore, and develop. And so we're looking for opportunities where we can get our hands on properties, spend some generated money on exploring, identify hopefully good resource bases, do bankable feasibilities, and bring to shareholders the opportunity to build another And again, we must understand the risks in the environment. So maybe we'll build a 50 to 60 to 70,000 ounce producer, which has got the potential to ramp up to maybe 150,000 ounce producer.
Yeah.
We always look for any investment has got to be NPV enhancing for the Caledonia shareholders as they stand today, and dividend enhancing. Otherwise, we're spending shareholders' money badly. And we have struggled because of the entry cost in Zimbabwe. We have struggled to find opportunities where the returns are better outside of Zimbabwe. They may be perceived to be safer jurisdictions, but there's a risk and reward equation that you as a banker will very clearly understand. And we as mining guys who effectively run a cash business, we've got virtually no borrowings. We have not raised equity from our shareholders since 2008. We believe that our share price is undervalued at the moment, so dilution is something we don't want to inflict on shareholders, and I'm a shareholder. So, we are probably frustrating some people by the pace at which we are growing, but we're not out there to just blow the lights out.
I do hear what you're saying. I like what you're saying. The bit of the picture I need you to paint for us, and not necessarily today, but going forward, is this early mover advantage in terms of you're already in country. You probably have access to the data and being able to identify these brownfield sites and take advantage of those before people can even come in and think about doing it. So I like that, but that's the part of the growth story which I'm not hearing a lot of from you, or not enough from you, as to how you go about doing that, when you're going to do it. We understand, because we understand mining, the timing of things like that, and when that starts to reflect itself in share price appreciation, because people are looking to the future with you, because they believe that you're a good mining operation. I guess you need to give them a little bit of frisson of excitement about how you move that forward and the pace at which you move that forward, not just what you've got today with the current operations blanket, etc. So that's what I'd like to hear, sort of coming down the line, maybe next time we talk.
Okay, but the confidence levels that we've got inside of our company and at our board level, that we are going to have sufficient money to finish the central shaft. So it is not 100% de-risked, but it is significantly de-risked compared to where we were in 2015 where we started. Therefore, over the last 12 months, we have been saying to ourselves as management, we'll get this done, and we'll get it done virtually inside our timelines and at our budget levels with the normal variations left, right, and center. But that says to us, when you need to put your foot on something, let's not start looking in 2022 when we are developing, when we are producing lots of spare cash. We've done the homework, we've got the names, we've got NDAs in place, and the complication is, again, 30 years of ignoring certain sectors. Some of the paperwork is not in tip-top condition, but we need to work to make sure that when you're talking to somebody, he is the legal owner. So you can understand, legal due diligence, technical due diligence, very, very important before you go and part with some good shareholder money.
For sure. Well, Steve, I've really enjoyed this conversation, but like I said, I've been reading about you for some time, wanted to hear it from you. I've watched a lot of what you've done. Big fan. Let's stay in touch. Let's see if some of these things moving forward, and wish you well for the rest of this year. Thank you for your time.
Thank you. Thank you very much indeed.
Thanks very much for watching. We hope you enjoyed that. And if you did, please click the button in the corner of the screen to subscribe to our YouTube channel. You can also catch us on our website, cruxinvestor.com, and Cruxcast, our podcast series. Plus, most days you can catch us on LinkedIn and Twitter. We'd love getting your feedback, so please keep that coming, and we'll speak to you again soon.